Hey guys, good morning. So it's GoldStreams here again. Trade 26th of February. Now, today was an interesting trade. So as you can see, I'm looking at the 30-minute time frame. I think by now you guys understand that I've got three screens. So I've got the 1 hour time frame open and the 15-minute time frame. These are the three time frames I keep an eye on. Okay. When I come onto the charts, I look at the daily, I look at the 4 hour time frame, and then I open up the 1 hour, the 30-minute, and the 15-minute. These are sort of the most efficient time frames for myself and for the way I trade. So simply put, come in this morning, and the 4 hour was sort of had a massive rejection wick to the top side. The next 4 hour candle opened up, and that's sort of what we were looking at, right? So it was quite good because we had a resistance form, okay, and then we had the 1 hour time frame, and this is where I was watching the 1 hour close, and the 1 hour close with a tiny bullish body, massive rejection wick to the top side, right? With like 60 pip rejection wick to the top side. Now, as you can see on the 30-minute, you actually had resistance at where the 1 hour closed, right? You had resistance at 29.14. Okay. Now you also had a support on the 1 hour time frame, which was created at around 29.23, clean range to the top of like 130 pips. Underneath the support, you have clean range of around 180 pips on the 1 hour time frame. But we had a bit of traffic, especially on the 30-minute time frame. You had resistance, well, clean range pretty much until like for about 70 pips, and on the 15-minute it wasn't so clean range. You had a lot of stops in the way, right? It was very messy range on the 15-minute time frame. But the 1 hour is what I was concentrating on, and I switched the screen a little bit late, but you're going to see what I did exactly. So the 1 hour time frame after it closed, basically with a massive rejection wick to the top side, very small bullish body, little to no wick on the bottom side. I was waiting for the next 1 hour candle to wick up, break that low, and have an entrance. And we had about a 20 pip wick to fill on the left hand side, right? Once that happened, right, it was a simple 1-to-1. It wasn't nothing special, right? It was a simple 1-to-1. I had a stop loss of around 15, 16 pips, and I had a take profit of around 18 pips. Okay, so it was a very simple trade, right? But you can see on the 30-minute, it looks a little bit messy. Now, the 1 hour time frame is a stronger time frame, stronger confirmation than the 30-minute. Just like the 30-minute is a stronger confirmation than the 15-minute, right? And the 15-minute is a stronger confirmation than the 5-minute. So when you are trading and you're looking at multiple time frames, which I highly recommend you keep, you keep an eye on the 30-minute, on the 15-minute, on the 1 hour time frame. If you're trading like the way I'm trading, so scalping, 15, 20 pips out, then it's very important for you to keep an eye on all these time frames and understand that if the 1 hour candle is giving you a strong confirmation, right, it will most likely override what the 30-minute does and sort of what the 15-minute does, right? So in this case, if you're looking at 30-minute time frame, it's very easy for you to miss this trade because you're waiting for a close below support. Okay, so on the 30-minute time frame, you'll be waiting for a close below 29.14. Okay, now if you're waiting for this close and you see a big move like this happen, it takes a couple of times for this to happen, and then you stop and you think to yourself, why am I missing these big moves? They must have had some sort of possible entry on another time frame. And that's what you need to analyze about trading. When you miss a move and you see the market's, done something drastic and you're like, well, hold up, that wasn't clear. Why didn't the 30-minute close the way I wanted to close? Or why didn't the 15-minute give me a confirmation? Or whatever the case, you have to look at multiple time frames. So in this case, we was trusting the 1 hour. Now, another reason why we was trusting the 1 hour, and another reason why I was so certain in entering the sell, and I didn't wait for a candle to close, bar the fact that the 1 hour had the most picture perfect impulse entry that I like to personally enter, the daily candle was also flipping bearish. Okay. Now, when the daily candle, right? So when a big time frame like the daily candle is flipping bearish or flipping bullish, you understand that the probability of you taking 15, 20, maybe even 30 pips out of that move is very, very high compared to having like a 15-minute candle flip bearish or bullish. It might flip, go 5, 10 pips and then reverse, right? That's the logic behind it. So this move was based off the daily flipping bearish, the 1 hour perfect impulse entry, the 30-minute breaking support level. Okay, so these were the three key factors. What would have made me not enter this move is if the 1 hour candle wicked up too high and didn't give us a possible stop loss. That would have sort of put me off, right? I might have entered with stops just back in the zone, and then say using like 1% risk, right? But in this case, no, we used 2% risk, and the stop loss was pretty much picture perfect. I am having some challenges with my magic keys. For some reason, I don't know what's going on. I'm charging it. You know, I tend to charge it every 3-4 days. It's really, really good. I highly recommend Magic Keys, the physical version. But for some reason, I'm clicking open trade, and I think what the problem is I'm opening the calculator on one screen, and then I'm clicking on another screen. I click open trade, and obviously it doesn't react. I have to click on the same screen and make sure that it's reacting on that particular screen that I have the calculator open on. So I think that's my fault. I don't think Magic Keys is actually doing that, but you know, it is what it is. In this case, it gave us an entry instead of where we wanted to enter, which is 29.14, literally as the 1 hour candle was breaking the high. It gave us an entry of around 3-4 pips later, which is fine. These things happen. Now, I haven't sped up this video, okay? I haven't sped up or slowed down this video. I'm leaving it just the way it is because it was a short 12-minute trade. It didn't last long at all. And I know all my videos are sped up, and I want to leave this sort of as authentic as possible, just so you can understand the patience that's required when you're looking to enter an impulse entry, right? I'm not even looking at a 30-minute screen, by the way. I was looking at the 1 hour screen the whole time, but you can get the gist. When this current 30-minute candle breaks the low of the previous 30-minute candle, that's also the low of the 1 hour being broken, all right? Because two 30-minute candles make 1 hour candle. So you're waiting for this, and you know you're watching the candle move up, you're watching the candle move down. You're not trying to predict what the candle is going to do. You know, you're not trying to enter up here where the price is currently and think, no, you know what, this is definitely going to break the low, or I'm sure it's going to break the low. You don't trade on hopes. You trade on price action. Okay, so when you see the low being broken, that's your confirmation to enter a trade. Yes, sometimes that means, you know, you're a couple of pips late, which is fine. Sometimes spreads open up a bit, and plus you're a couple of pips late. Again, it's fine. Just still keep your target where it was. Okay. Another key factor that I want to mention, and I see a lot of traders struggling with this, is leaving money on the table. Okay. Now, when I was planning to enter this trade, or when you're planning to enter a trade, right? You've got you've got a criteria, right, that you follow. So for example, that criteria might be, you know what, I'm going to enter this trade, I'm going to have a 15 pip stop loss, and if the trade goes 18, 19, 20, 15, whatever the case may be, I'm going to take profits there and then. All right. Now, if you take profits at 18 pips and the candle moves 80 pips, why do you have a problem with that happening? Why do traders beat themselves up because they didn't catch the full move? This is a question you need to ask yourself. You was comfortable before that happened with 18 pips or 15 pips or 20 pips, right? So you need to be comfortable with that again, right? You need to understand that that's what my plan was. I executed on my plan. My plan is to make 2% a day. That's my target. And that's what I try and do. So this is exactly where my entry was trying to be. And as you can see, I was like a pip or two late, which is fine. Now this is the 1 hour time frame, and this is what I mean. This is a picture perfect. Take a screenshot of this, take your phone out, take a picture of this. This is a picture perfect impulse entry. We have a nice wick to fill on the left hand side, and I'm going to start adjusting my stop loss and my take profit. Okay, because I was faffing around with the magic keys and it didn't sort of open exactly where I wanted to open, and it didn't set my levels correctly, which is completely fine, right? So you can see, luckily at this point it didn't take me out, it didn't hit TP. I know, right? You're saying lucky it didn't hit TP, but I didn't want it to hit take profit at this point, so I'm faffing around, I'm trying to figure out what's going on, and I'm like, okay, cool, understood now, understood my lot size, understood what the keys did. I brought my take profit down, I brought my stop loss down, right? Because if this candle flips bullish or even goes back in the zone, I'm closing 50%. If it flips bullish, I'm closing full. And obviously I'm adjusting my take profit now to a reasonable level, and I want the whole wick to be filled on the left hand side. It's Wednesday, a lot of volume in the market on Wednesday, and you know, you can expect it to sort of come down. So you can see the risk reward is 1 to 1.4, right? Which is a fantastic risk reward in my opinion. It's great. It allowed me to make 2% on the trade, 2% of the day. And the minute this trade is done, the minute this TP is hit, okay, I'm closing the PC, right? I'm finished and I'm going off about my day. You do your non-negotiables. Again, non-negotiables, guys, are very, very important. Trading is not about what you do on the charts, right? What you do on the charts, yes, it's important, of course, 100%. You need to stay disciplined, but you need to understand that you need to have non-negotiables. You have to have non-negotiables such as like working out, reading daily, eating healthy, whatever that may be. Set your non-negotiables and stick to them. Once you finish your trading for the day, 1 or 2 trades, 1 to 2% risk, go off. Don't look at the charts, right? Don't tempt yourself. Go on and live your life. Go and do other things that you need to get done. All right, carry on with everything else that you need to do. But as you can see, that was 17.5 pips. Candle kept moving down. Completely fine with it. I was happy. 2% for the day. But yeah, make sure to like and subscribe, guys, and we look forward to doing the next video. Thank you for watching.